Thank you for watching the Housing Oregon YouTube channel. Be sure to join our network and get involved in the work that we are doing. If you can, please like and subscribe. It helps us build this channel, which serves as a platform to communicate with our members. This video is part of our 2025 annual conference. We're looking for folks to be on the conference planning committee. Please email info@housingoregon.org.
So, whoops. Okay, let's get this going. Nope. There we go. All right, so social housing, if you were in some of the sessions today, I mean, really some of the key principles of social housing are that the housing itself is owned by either a public body, likely a government or a nonprofit. They retain permanent affordability and are, what did we hear the word? I get it wrong all the time. Nope. Thank you. They're protected from the speculative market. Otherwise, so basically taken out of the private market, and they do offer a level of community control and engagement. So those are the key pieces I'm going to focus on today. There's other elements which I really was excited to learn about with the development and design of social housing in the Vienna model. I think we have a long way to go as a community land trust in incorporating those things, but it was a really exciting thing to learn more about today. Oops, darn it. So when we go into community land trust, many of you in this room probably are aware and understand, hopefully, what they are. But our organization, we focus primarily on home ownership and low to moderate income home ownership. Community land trusts across the country can be used for rental housing. They could be used for agricultural protection for farmers. They can also be used for commercial properties, but the intent is basically that the land itself is owned by a community controlled nonprofit organization, and the restrictions on those on that land ensure that the land is used for that purpose during essentially forever, that permanent piece of it. So in our organization, and what I know the most, our homeowners actually purchase the house on top of land that is owned by Proud Grounds Community Land Trust. This in and of itself makes the purchase price lower, right? That's the whole goal. Most of our homes sell for between, I would say, 50 to 80% less than the market value. So they get real value and real savings in the purchase of their home. They then agree to lease the land through the nonprofit for a 99-year renewable lease. What that means is it is a forever lease. At the end of 99 years, they can renew the lease, the same lease that they signed, or they can sell the property to another lower moderate income homeowner. Essentially, this is what takes this property off of the speculative market. That lease is also very protective for our homeowners. The idea that it is 99 years renewable means that we can't make changes to that during the term that they're in their home. So it opens up a lot of security and stability for the homeowner as well as mortgage financing. All of our homeowners then agree that when they sell their home, they are going to sell it at an affordable price to another lower moderate income home buyer. The resale formula that's outlined in the lease agreement is what restricts that price. It does balance the homeowner's ability to gain wealth through home ownership with the need for this home to stay affordable to other families just like them. So what we have seen over the years of doing this is our homeowners are selling to other low and moderate income home buyers, and they are walking away with money to either put into a market rate home of their own or transition into other types of housing. I think across the country, and what we've seen as well, is that a majority, it's like 60% of the homeowners that sell homes do go on to buy a market rate home. And the biggest, I think, thing, so what I was going to talk about with the social housing piece was, we have a lot of houses or housing that's owned by the government or a nonprofit organization. We even now have housing that has long-term affordability or permanent affordability. But the uniqueness of the community land trust model really is that homeowner engagement. So I have a whole slide that I'm going to talk about that. But we do have homeowners that serve on our board of directors and are members of our organization. So when our homeowners purchase houses with Proud Ground, they do have full rights to the use of the land. So a lot of people with our model, it's like, oh, you don't own the land, you don't want to do that. Really, that 99-year lease gives them full rights to the use of the land. So they can have a garden, they can have chickens, they can have goats, we heard that earlier, as long as the city allows it. And they can essentially feel like any other market rate homeowner. They do have to owner occupy the home, so it does have to remain owner occupied. We do actually consider children and spouses to be owner occupancy in our properties. And these are inheritable. So that was one of the things we heard earlier about the social housing model. These are inheritable properties. In addition to that, if our homeowners ever decide to sell the home, they can actually identify the next home buyer. That next home buyer does need to be lower moderate income, but that gives them the ability to pass, maybe they want to sell their home to their grandchild or to another family member to keep the property within the family prior to their death. The biggest piece that they're signing on to is that resale and agreeing to sell it at the affordable price. There's different resale models. This is not going to be all CLT 101, but there are different resale formulas that are used throughout the country. Our resale formula looks at the difference in the appraised value and gives our homeowners a percentage of the increase of appraised value. We have estimate that after about 10 years of ownership, our homeowners have about $110,000 in equity right now within our portfolio. So they are definitely helping with, obviously, generational wealth creation. Oops. So the community land trust model and doing it this way allows cities, counties, jurisdictions to put an influx of money into bringing a property into the community land trust one time. So they do it at the initial time when the home enters the program, and then the resale formula itself and that lease agreement ensure that resale after resale, the home will always be affordable to low and moderate income families without any additional grant money needed. So this allows us to serve more households over time. It also allows communities to really look at areas that they want to invest in, areas that they think are maybe seeing rapid displacement of residents or at risk of rapid displacement. They can actually target these properties into those areas and bring them into the program to secure it for future, to kind of mitigate that displacement risk. And then I think what's exciting, and I think what Proud Ground has found actually in our 26 years now, is it's really a flexible model. So we can actually get funding from different sources to bring in, down payment assistance to bring an existing home in the community into Proud Ground's program. So it could just be a house for sale on the open market that we buy down the cost to make it affordable. We partner with for-profit and nonprofit developers to bring in public and private grant money to buy the house, the cost of the house down. We've also done acquisition and renovation of homes, and we have done that successfully with some of the housing authorities, dispositions across the region. And this model works in both high-density urban as well as rural communities. So it really works in any community where there is a disconnect between incomes and the cost to own a home, which I think is pretty much in most communities within Oregon. Proud Ground has also been successful using what we call like a deed. I don't like to use deed restriction, but we also call it an affordable housing covenant. So in situations where Proud Ground cannot own the land under the home, for example, a condominium within one condominium within a development in Beaverton, for example, we can still do this model. And in that situation, we're still bringing in down payment assistance, so the homeowner is getting a great reduced sales price. And we're recording this restrictive covenant basically on that property that ensures that affordability resale after resale. Partnerships are key. We have many partners I see in the room today that have helped us make this successful. One of the greatest partners we have are the local government. So it's Proud Ground actually has a very, very wide service area, which is unique for community land trusts. We serve 6 different counties. So we have a lot of connections with different funding sources. They can assist with land donations or funding or policy support. And I don't want to I know Kristen's going to talk a lot about this in her next slide. We also work a lot with nonprofits. So those nonprofits that do community engagement or housing counseling. And then our lender partners are key. I know there was a session right before this about lending for home ownership, and that is really important because community land trusts are a unique model. And so if you don't have key lender partners in place that can offer the home buyer a competitive mortgage, then it could become unattainable or unaffordable for the families. And then we also work closely with developers, nonprofit and for-profit developers. We have a great partnership with Habitat Portland Metro Region. Many of you know this, but most of their homes, or all of their homes actually moving forward, are actually coming into Proud Grounds Community Land Trust. So they do what they do best, which is work with all their families, do the building, get them in, and then Proud Ground is the one that ensures that when those homes sell, they will also sell to another lower moderate income home buyer. And then as I mentioned before, the key piece that I wanted to highlight is this, and because we have Heather with us today, is the Community Land Trust's resident control, what I'll call, control is such a strong word, resident engagement that we have as a community land trust. We are considered a classic community land trust. That means that we are required by our bylaws to have at least 1/3 of our board of directors be current Proud Ground homeowners. In addition to that, all of our homeowners are voting members of our membership-based organization. Members also include anyone that lives within our service area that donates, I think, a minimum of $25 per year. So that membership base is important, and that's what brings that, the community, into the Community Land Trust. We are required to have our members vote on who serves on our board of directors each year. We have to get votes if we change our bylaws of our organization. If we ever wanted to change our resale formula, we'd also need to get membership approval of that. And in addition, which I think is the biggest key aspect, is if we were ever going to sell a piece of land out of our community land trust, we need member approval to do that. So that member and resident control and engagement really does make a big difference in the organization as far as creation of policies, reviewing of projects we want to pursue, and it's actually one of the things that back when I got this job 21 years ago, actually this last weekend, I didn't know anything about community land trusts. I was in social work, I was working in rural housing with homeownership, and when I started learning about community land trusts, I was like, oh my gosh, you have homeowners on your board? This is amazing. This is why aren't we all doing this, right? So it's one of the things that I get really excited about, which is why I'm so excited to have one of our homeowners here to really talk about her experience and her engagement with the organization.
Hello. So as Katie said, I'm going to talk a little bit about how I came to be a CLT owner and why permanent affordable home ownership is important, as well as kind of a little bit about the post-purchase engagement piece and partnerships. So in order for me to do that, I have to start at the beginning. I'm just kidding. I won't go all the way back. But that is true. The story does kind of start there, like where I was born and raised. I was raised in a small rural Oregon town, a conservative one, very insular and poor. And my parents are both low income still. My mom is white and my dad is a Filipino man, and I speak to that because of the historical, like, systemic oppression of especially my dad's family. They were labor workers. They came over from the Philippines to Kauai, where they lived, worked, and died basically on the sugar plantations over there, and lived in little tiny cabins. They had 14 people in like a one-room cabin, and my grandpa and grandma never got to like own a home. They grinded for somebody else until they died. And my mom's family was very similar. They came from Finland, and they worked in like fishing and logging industry until they died, never owning a home. It's just never something that was ever possible. I never even questioned it. And where I grew up in a very dysfunctional household where I spent a lot of time moving through systems, where I was lucky to even have a place to sleep, let alone a place to rent, let alone a place to own. And so after getting out of all of that, I came to Portland to study social work, where I thought if I could just get through school and get a degree, I could buy a house. And I was so excited because I had done all the right things and got into $100,000 in debt so that I could, be an adult and buy a house. I never knew it was a goal until I had kids of my own, and I was like, I don't want to move around anymore. Like, I don't want to wonder if tomorrow my rent is going to be raised $500, and then what am I going to do? I have people that I'm responsible for. Well, after the pandemic hit, I thought this was the time to buy. So I started browsing the open market, and I was shut down very quickly. I am not going to buy a house, even though I have a livable wage. It's just not enough. And that's still very true now. And then I remember I worked in homeless services for many years, and we would talk about Proud Ground a little bit to some of the families that would come through that were probably mortgage ready and could buy. But never once did I think that I would qualify for that program. And I thought, why not? I tried it, and connecting with Proud Ground, they really made it very clear, what you need to be mortgage ready. They helped me get there very easily, apply, and before I knew it, I got my number pulled, not literally my number, but I came into an opportunity to buy. And I don't know if you've bought a house before, but it is terrifying. There's a lot of papers, there's a lot of people. You're signing things, you don't really know what you're signing. Yeah, but luckily I had the help of Proud Ground, and actually, Katie, you helped me, which makes me think now that I know more about the organization and your role, how did you have time to help me buy a house? She was my point of contact the whole time from start to finish, and she connected me with lenders that were very compassionate and did not mind that I emailed them once a day or however many times. No question was stupid. And a couple of the benefits of the qualifying process was you only have to qualify once with your income, because I still had in my mind that I was going to make big money after that. What if I lose it having to apply or resubmit or recertify? And you don't have to do that, which is really cool. And also a piece of what Katie was saying with the equity, that I bought my house and then got it appraised, and it was already I had a tremendous amount of equity just overnight, because of the opportunity to buy it at such a discounted rate. So that felt like a little flex, honestly. I was like, oh, I have equity now, But yes, so after buying a home, I have been able to engage in several ways with Proud Ground. As Katie mentioned, I eventually came to be a Proud Ground board member, which is super trippy that you get to have input on the program that basically gave you stability for your whole life. And I also live in a habitat community. So one of the program owned 3 out of 10 of these units in this community. And the plus side of that, and especially now that Habitat is transferring over more to a CLT, is that I get to engage with both organizations and both communities. So I get a lot of opportunities through Habitat because of that. And I get to, in addition to being a board member, I get to work with Habitat on their Homeowner Leadership Council, which is pretty new. We're going into second year, actually. I'm becoming an elder, they told me, which is very exciting. But we get to focus on advocacy and homeowner opportunities to engage, strategic planning. We're even doing a micro grant program where homeowners can apply for grants for their communities. We get a lot of engagement opportunities and a lot of say in a lot of important things that I never thought I would be making these decisions or at least contributing to these decisions. And lastly, I'll speak just a little bit about one of the opportunities that I came across that maybe was a mistake, but I am also on the HOA board. I did not want to do it, and now I know why. It is horrible, but that's of no fault to anyone but the HOA, no offense. But it's cool because even then, I get to make decisions on behalf of the community, but with full input from them. And I get to kind of be a little bossy and be like, no, this is not accessible. This is not accessible. We have fixed incomes, and I get to kind of play that role, which I do enjoy. But the best part of that is just being able to have a community to live in, have a community to stand in solidarity with, and I get to my neighbors' children feel like my own children, and that's so cool. And seeing them play in the yard, I'm like, oh my God, I did it. It's wonderful. And I think the community piece of the homeownership is probably the best for me. I get a lot of food from my neighbors. They make me delicious falafel, hummus, and I'm trying to outgive them. It's just so wonderful. I am so fortunate to have that opportunity, and I hope that I answered some of the prompts, but I'll answer more questions at the end.
Okay. Thanks, Heather. That was great. I think, I'm going to trade spots, but Katie's going to help me with the technology. It was great to hear Heather talk about the community piece, because working on policy, I don't always get to hear the stories. So community land trusts do not need legislation to exist. They can exist with just existing real estate laws and what's on the books in most states. But we've learned that legislation can help tremendously. And so I'm going to talk about some of the ways that municipal and state governments have been helpful to community land trusts. Who in the room is either part of a city government or a state government? Oh, awesome. Okay. So please, I have been told that I talk too fast and that I use jargon. So please interrupt me if you have questions or if I'm not making any sense. Okay. Which one? Oh, yeah. Thank you. I'm on the other side of the technology gap. Oh, thank you. Thank you, Katie. Katie is one of my clients. I have to say, she helps me more than I help her usually. It's mutual. Okay. All right. So here's some of the types of legislation that you'll see that are specifically aimed at community land trusts or are sort of adjacent to it. First of all, at the state and at the local level, you can provide startup funds for community land trusts. That's huge. Community land trusts tend to be subsidy heavy on the front end, and then the value they give on the back end, you can't replace. Think about it where, you buy a piece of property and it feels out of reach this year, and you do it anyway, and 10 years from now, you could not buy that property with, anywhere close to the same amount of money. So when you're taking property out of the speculative market, that just gives back over and over again. And like Katie was saying, the stats are 6 out of 10 homeowners in a community land trust will purchase a market rate home. I have to say that was, I think, a 2011 statistic. I think right now we are not in that good of a place, honestly. Hopefully we will be again, but all of the benefits, and also the foreclosure rates for community land trust homes tend to be, the study was said 10 times lower than the market rate foreclosures. And a lot of that has to do with the stewardship, the post-purchase stewardship. Another example is shared staff. And I'm going to show slides on each of these things, so maybe I'll just move forward and go ahead and show all the slides instead of reading it to you. Okay, so startup funds. A great example of this was the Houston Community Land Trust. They gave $2 million for startup funds for a new land trust. And that may not sound like a lot of money, but that money for a community land trust goes a very long way. And they have been able to get, I don't know how many homes, do you know? Yes, maybe 200 already, just within the last, 5 years. Shared staff. So another thing you can do as a government, and this would be more local government than state, but is to help with staff. So the Burlington example is a key. It's a great one because in the 1980s, Burlington there was a community land trust started in Burlington, and there was state legislation for funding and things like that, but also the mayor at the time happened to be Bernie Sanders, and Bernie was very kind to the community land trust model, and so he helped share staff, and the result is that to this day they are the largest community land trust in the country, even though they're in a small, rural, fairly poor state. And they do a lot of, they do rental as well as homeownership. Inclusionary zoning. In states where that is allowed, I live in Montana, that is illegal, as are transfer taxes, real estate transfer taxes. Unconstitutional, actually. There was a constitutional amendment passed. So when you can have inclusionary zoning units and they actually get built, an excellent way to go is to have community land trusts become the stewards of those properties. And they can be paid to do stewardship rather than having city staff do it who aren't not necessarily familiar with the model or understand it. I have a quick horror story to share with you. The city of Denver did a legacy project. I don't even remember when it started, maybe in the early 2000s or 2010s, but they put 1,400 homes into essentially what was a citywide community land trust. So they owned the land, they retained the fee ownership of the land, and individuals could buy the homes, and there was a deed restriction on the titles. Well, these things, the staff dwindled, there was sort of loss of political interest, loss of political will. They went down to 0.5 staff for 1,400 homes where you need to, make sure that the home's being sold properly, and that, anyway, the title companies did not, in many cases, sold the land along with the home, sold the land that the homeowner did not own, and then And yeah, so when it got found, when it was discovered, they had lost multiple hundreds of homes. And the shocking thing is that the title companies decided statewide that they weren't going to honor these title insurance policies. And they got away. I don't even know how that worked. Maybe someone afterwards can explain that to me. But you don't want that. And so my advice to people is, yes, city, provide help, but don't recreate expertise where you don't need to. Don't double, have double efforts. Like contracting with a community land trust, that provides them with income if you pay them for stewardship, and they can help make sure that the housing doesn't go away. These examples are, let's see, Chapel Hill on the left, 96 units were built, 15 of those are affordable and stewarded. And on the right, this California development has 425 homes, 77 of which are affordable. Operating funds. That's one of the hardest things to raise money for, as probably most of you know. Foundations don't like to pay for operations. It's not very interesting or sexy. And so, a lot of times CLTs will get acquisition funds or development funds, maybe even technical assistance, but they're not getting funds for their staff. And the staff, is a very important part of this the way this works. They keep the permanently affordable provisions from falling out of use. So, in this case, the City of Bridges in Pittsburgh, let's see, they do an annual grant to the CLT, and it supports 99 homes that are in permanent affordability. Ooh, look at this. It's background. So the last one I'm going to talk about with the slides is taxes. So community land trust homes should not be taxed at the rate of market rate homes. And you're nodding. Why do you think that is? No, I wanted to put it out there. Okay. Yeah, so he's saying that because community land trusts are a public good, then for that reason, maybe we should apply the rules that are applied to other types of public housing and not tax community land trust homes at the market rate. And that is definitely a good policy argument. Another argument is that the land is not owned by the homeowner. The homeowner has a resale restriction. They're never going to get that market rate, so they shouldn't be taxed for it, right? That's just not something, it doesn't make any sense. And the margins are so small, trying to figure out the finances for a community land trust home and put all this subsidy in and make sure that the mortgage rate and with the taxes and the insurance and everything else is going to be under, do you guys do 35%? Like 35 to 38% in the case of Proud Ground, and in some cases even a little lower, of somebody's monthly income, so that you're not housing stressed. So trying to do all that, if the taxes go up with market rate, then you could be taxed out of your community land trust home, even regardless of all this great subsidy that's in it. So the way that kind of the argument best practices is the land can either be taxed at a very low rate because it can be taxed on what the fee, the sort of monthly community land trust fee is, and there's a formula for that. Also, nonprofits, depending on the situation, nonprofits can apply for tax exemption for the land. In some states you can do that, in some states you can't. And then, but the housing, yes, the housing is owned by a private person or persons, and so they should be taxed, but taxed again on the value that they're going to be able to realize from the home, not the value that the market says they should be realizing. And we got this great. So I co-wrote a policy focus report on this with John Davis, who writes a lot about CLTs. And we just got an email this morning from Arizona saying we were being taxed, from a CLT, saying we were being taxed unfairly. Been trying all these different approaches. And finally, she got in touch with the tax assessor and took the booklet, took the policy report with her and showed him like the breakdown in the tax chapter, and it's looking very positive. So that's a plug for the report. It's free. Oh yeah. Oh, so in Oregon, the taxes are, CLT homes are taxed appropriately, which is great. Some other policies in Portland and in Oregon that are helpful to community land trusts, I'm just going to mention and then pass the mic to Katie to talk about a little more. The zoning law changes that happened in 2024? Or was it earlier? Maybe a little earlier. So as a result of those, even though they're not directed at community land trusts, Proud Ground was able to take one single family lot and put 6 condos on it that were in permanent affordability. And that was a pretty quick turnaround. That had a huge impact. Also, the Metro Housing Bond Fund of $10 million is, at least according to the news report that I read, so there's supposed to be 87 homes that will be permanently affordable using that money. Sounds like, well, anyway. And then the Healthy Homes Fund, again, it's not directed at community land trusts, but one of the things that we're finding now that community land trusts are kind of coming of age, they've been around since the late 60s, early 70s, and suddenly there are all these repair issues, and so people need to think about that funding for the long term. So having a maintenance reserve fund, so that those funds are available in the state of Oregon and can be used by community land trusts. Best practices. Okay, so if you want to help community land trusts, here are some thoughts. Respect the C and CLT, that was covered by these two earlier. But the longer I work for and represent community land trusts, the more true it is. It becomes very clear to me how true that is. If you don't have resident homeowner engagement, you're going to have problems. And yeah, that's all there is to it. It's just cheaper on your legal bills, if nothing else. But it also, there should be nothing about us without us. I think that should apply to homeowners. If you're going to give money, give it in the form of a grant rather than a loan, because if you give somebody a zero, it sounds great, 0 interest, forgivable loan. If you do that with the community land trust, then on their books, they have a debt instead of an asset. And so when it comes time, if they're going to try to develop or do anything, acquire land, it's going to make it harder for them to be able to get financing for it, because it just makes it skews their books. Racial and environmental justice. I think this community land trusts were an outgrowth of the civil rights movement, and they started, the first community land trust was in Albany, Georgia. It was actually a huge 5,700 acre piece of property It involved all the things you can do with a community land trust, including homeownership. There were community spaces, there were businesses, people farmed the land, and it was an incredible idea, and it did survive for 15 years in its kind of initial state, but they were so besieged by racist policies, violence from white neighbors, and on and on. And so what happened was then kind of the community land trust kind of moved into the city and became more housing focused. And now in the last few years, I'm seeing a return to interest in all the things that a community land trust can do for community economic development, not just housing. And it's pretty exciting. Environmental justice also, and climate change. People are designing. You can also design smart. I heard some great talks about design and smart ways to do these things. Let's see. Impact versus scale. So there's, because of this ongoing housing crisis, I look back at articles that were written 20 years ago, and they're talking about a housing crisis. And and it's just gotten so much worse. So there's this panic that's happening, and people really want to go to scale, whatever that means to them. 1 million homes in 10 years or whatever. And that is great. But again, you have to think about the community and what the community wants and what works best. And just remember that sometimes small is really beautiful and is worth supporting, as well as the large projects. And that, I think, questions?
Before we get to questions, which we are going to give ample time for questions, but one of the things we were connecting about was local Oregon policy and how policies can support community land trust growth. And I just wanted to speak a little bit to Proud Ground's experience working in as many jurisdictions as we do. There are certain jurisdictions that we work with that actually, if they're going to fund home ownership with any of their funds, that has to be permanently affordable. And so obviously those jurisdictions we work with a lot, and that's just, they've taken that stance. For example, Tigard and Hillsborough have kind of committed to that. We work with other jurisdictions that prioritize permanent affordability in their funding, or they might give, understanding the impact of investing in a community land trust home up front, they might be willing to give more money per buyer because they know it's going to be permanently affordable. And Washington County is an example of that. And then we also work with jurisdictions where they have, they have funding that requires either the permanent affordability or like land ownership. So that's, OHCS lift funds is a big part of, I think, the growth of this type of land lease model of long-term affordability in Oregon. That definitely has spurred a lot of interest across the state. And that is something that was created out of the funds that are being funded require that, right? So I think that's an important thing to see the levels of working with different jurisdictions and with policy, really having areas that are understanding the value and the impact of these permanently affordable homes is really important. The piece that I was going to say too, you mentioned the grant not a loan. That also not only, as you can imagine, complicates the community land trust's need to get construction financing or things like that, but first mortgage lending. I was just actually, after this, I have to amend some documents for a lender based on some city, they have these documents. Anyway, can make it very, very challenging. And when you think about it, when you put money in as a loan, what those loan documents say from the city is that it has to retain its affordability, right? Well, that's great because they usually use that when they don't have a CLT. So they're always just thinking, we need some way to ensure this home stays affordable. But when you have a CLT there, it's really like the belt and suspenders type piece. That's what we really try to advocate for, is like, that is why we are here. That is what we do. That's what these governing documents do. You do not need an additional layer of funding to, or complications of paperwork to ensure that it's going to happen. And we have a track record. So I think that's important as well. Speaking to that track record, not that I'm competitive at all, if you know me, but, Burlington, Champlain Housing Trust, largest community land trust in the country. I was just on a call with them last week. They have 700 homes in their homeownership portfolio. We have 600 at Proud Ground, so we're getting close. Anyway, yeah, so right here, but I also wanted to speak to, it's not just Proud Ground, there's other community land trusts in Oregon that I didn't get a chance to speak to, but they are also popping up around Oregon, and with the LIFT funding, the habitats across Oregon are doing this more and more. So this is coming, and I would, put a plug out there, I guess, for those that are using a land lease model of permanent or long-lasting affordability. Really consider that community side. What could you do within your organization? Like Habitat does not have homeowners on their board yet, but they have this engagement committee that they're working with to really get that community aspect in their organization. So there are other ways that you can look to adding the C to your program if you're doing this without becoming a full, classic community land trust. And I think we're going to now open it for questions. And we have to get this mic out there. We've got someone helping us. Thank you.
$3.
So in this model, a homeowner still is taking out a loan for a lower amount. What happens in the case of foreclosure?
Yeah. Okay. I feel like I'm a little nervous with the attorney sitting next to me, so maybe I'll let Kristen take this one. I will say, though, 26 years, Proud Ground has had 6 homes go to foreclosure. All of them were saved, although the homeowner did experience foreclosure out of 700 some odd families. The homes were saved, and they remain in Proud Ground's portfolio. So very low risk, but if...
So Fannie Mae, about 20 years ago or 25 years ago, created a product for buying a community land trust home. It's just called a rider, and now Freddie Mac has joined them. So you can get conventional mortgage financing for your community land trust home. And what the rider says is, if you go into default, if you are going to be foreclosed on, and the bank or whatever the lender takes possession of the home, but not the land, then the affordability requirements are removed from. So this is why CLTs have a vested interest in stewarding their properties, and they typically, the ground lease fee are so low, the monthly ground lease fees, that they don't really, we used to think that if you had enough housing, that the ground lease fees would cover operations. That really hasn't panned out. But what they do is they alert the community land trust to the fact that maybe this homeowner is having some difficulties. If you're not paying your ground lease fee, then there are ways that the community land trust can help. I always advise homeowners to reach out to the CLT, and even in a worst case scenario where they are going to lose the home, they can arrange a short sale rather than having to go through foreclosure and having that on the record. Or if the CLT has enough money, the CLT can just buy it from them directly. Yeah.
Actually, and to add to that, One of the thing, I don't know the actual statute, but there is a statute in Oregon that says that organizations that hold these type of restrictions in a non-judicial foreclosure have first right to purchase the home at auction for the amount owing the bank. So when you think about it, these homes are valued up here, the value, you know, the loan is down here, so we would always buy those back to save them if it got to that point. But like Kristen said, that's an important part of the CLT too, is the post-purchase stewardship. Sorry, they told us this would be hard with this mic. And it is, we are actively monitoring our homeowners, engaging, trying to connect them with the foreclosure avoidance counseling programs, or like in the worst case scenario, sell prior to foreclosure to ensure that they get their equity.
In a similar, oh, thank you.
Can you hear me?
In a similar vein, does the ground lease include language around home maintenance, like long-term, and then are there support resources for homeowners for maintaining their homes?
Yeah, it does. So our legal agreements require that our homeowners maintain their home in good, and the land, in good habitable condition at their own expense. So all of the repairs and maintenance are a responsibility of the homeowner. That is a burden for our homeowners, which is why, you know, we've been trying to we've applied for Healthy Homes. We're really trying to get more funding for that as a CLT. It's a big conversation nationally. I'm pushing home preservation dollars should be definitely an eligible use for these properties. They are, you know, they are affordable housing and public housing that will be there for forever. So, but currently it is something that we are actively working with our homeowners to connect them with a local home repair loan program, or we've done home repair IDAs, individual development accounts for families as well. So we're constantly looking at resources.
And the trend is now to also have a study done in advance. Like if you're doing development, not obviously in a single family home context, but to have a study done and have a repair reserve fund that would be thinking about 30 years, you know, from now, and how much money needs to go in per month.
Hi, I can give it to you after that. So my question is along the same lines about sources of operating funds, and you said that one of your examples had seed money of $2 million to start the CLT, and there is this ongoing question about operating the CLT. So I'm wondering if, Katie, you can talk about how much that costs to operate it, and how do you get that funding?
Great question. Our annual report is coming out soon. You know, you know, all the sources. I mean, we're getting public funds. We have transaction fees. I mean, the CLT is a critical part of every home that comes into the program. They do a lot of work for that, and so we are eligible for certain program administration and transaction fees from federal and local sources. So that's one source of earned revenue that we get. Our service fees, our lease fees, our homeowners pay, it's only $50 a month, but when you have 600 homeowners, that does, you know, that becomes a larger substantial part of the budget. In addition, at resale, when homes resell, we take transaction fees, and that is all part of organizational sustainability and operations. As well as seeding. Actually, we have a stewardship fund in which we have pulled funds when that repair, darn it, just needs to get made at resale, and there's, you know, the homeowner doesn't have the funds to do it. So in addition to that, of course, we're doing the same thing everybody else is, right? The public, the foundations, all of those pieces. But we are very fortunate that we're a very well-established organization that has several different types of funding streams. And I think diversifying that funding stream is really important, especially given the current climate and not having all of it funded through federal dollars.
Thank you. Thanks. This is really interesting. I really loved hearing the homeowner perspective, so thank you. One question I have is that I've heard across the state of Oregon that the different land trusts have different resale models. In fact, I've heard 3 different models, and I'm wondering to what extent it would be helpful to have a consistent land trust model so that we could scale it in a bigger way through, kind of just how to, I guess thinking in terms of doing the same thing over and over. It's easier if we're not learning new things every time.
That's a good question, too. The national folks, like CLTs, there are 3 main resale formulas. One is appraisal-based, which is what Proud Ground uses, as well as several of the habitats that are using lift funds. There's a kind of a fixed rate, which is what Portland Habitat uses, and some other, I don't know if any others in Oregon use that, but it's basically like you get 1.5% return every year that you live there. And then there's index-based, which is like, it says maybe you have to sell at the affordability level of to a 70% of the area median income buyer when you decide to sell. So those are like the 3 main types. What CLTs would say is because they are, it sounds interesting coming from a CLT that serves 6 counties, but they are really supposed to be community-based. And every community is different, and every community has different needs. So there might be a CLT in an area that actually doesn't have rapidly rising resale, or market values. But they might want to use a fixed formula to ensure that there's some more wealth creation there. So it is kind of community-based. I do like the idea of having it be an easier, simpler explanation. We also actually at Proud Ground have discussed looking into the appraisal-based formula based on appraisal bias. That does impact our homeowners, right? It's like if they don't get, if they have discrimination in their appraisal, that will impact the value that they get at resale. So that's something we're considering. We would have to take it to our members, right, in order to change our resale formula. So it would have to make a lot of sense. In addition to a resale formula, though, all of these legal documents say it still has to sell to someone at or below, mostly 80% of the area median income. We actually have homes in our program or our portfolio that are restricted at 50% or below, and those that go all the way up to 120% or below. But it still has to be sold. So even if that fixed rate over the term of 30 years that they've lived here says they could sell for here, if incomes don't support affording that, they might not get that price. So it's kind of like a, we call it a ceiling, I guess. The resale formula sets the ceiling price, and then the seller, based on any other restrictions in their documents or the market or the condition of their home, for example, may have to lower that price as well. Did that answer? Okay. So I didn't say one way or another, but it could be complicated based on the needs of the community.
Totally agree, but I think because we are pushing for scale, there's so much drive to create more housing and to use models like the community land trust model. I think when the documents get revised, the last revision of the ground lease was 2011. It's pretty long overdue. And so when that happens, my guess is that they're going to come up with one, and it'll probably be the fixed rate percentage formula.
That is actually one thing that would be really helpful to have the similar resale formulas, because one of the things we've run into is through federal funds, especially home dollars, they have to have a model that has been a resale model approved by HUD, and that has to go into their HUD action plan. And for example, in Vancouver, in Clark County, we are a CLT, and Evergreen Habitat is also functioning as an LT, I'll just say. But they are doing the same kind of program we are. They're getting the same federal funds. They have a different resale formula, and now baked into the Clark County and City of Vancouver HUD approved action plans is basically Proud Grounds appraisal-based resale formula. So that has caused complications with federal funds when we're trying to say, no, this can be another one. So that could be a good benefit.
Hi, my name is Braden. I'm with Mackenzie Community Land Trust. So we were stood up to build affordable housing after the holiday farm fire, and we have our first 6 homes that are nearing completion, and people are hopefully moving in before the holidays. So my question is mostly for Heather. When you're speaking to that kind of overwhelming feeling of, buying a home for the first time, I'm trying to think of, what are all the things to address to ease that. So I'm wondering, if the keys in hand, was there a couple of lingering questions you had, or if you can, on the flip side, touch on a couple of things that were really helpful throughout that process that just really, eased that overwhelming.
Well, I've been scared of this mic the whole time. I was hoping I wouldn't get a question. Wow, good question. I think that having a very, Proud Ground, I feel has a really, a tight-knit group of folks that they work with as far as lenders and title companies and all of that goes. They have good relationships, long-lasting relationships with these entities. And I think that really helped. Being referred to someone they know they can trust means that I can trust them and that they are familiar with the process. I had a realtor that did not know about CLTs, and so that was a little difficult, just not having that knowledge of any of it, really. So that would be my suggestion, just have good relationships with the other folks that you work with, that know the process, so that I don't have to figure it out for the realtor, which I did have to do a little bit. And then I think post-purchase, that's when the questions come, because you're oh my God, who's going to do this? Oh, I am. Proud Ground offers a lot of, and Habitat too, post-purchase education. And so that was really useful and can be, from repairing your sink to home equity loans, what does that look like? So you never just get dropped, there's always a support system. So yeah, and congratulations, that's really cool.
Thank you.
Very exciting.
Hi. Is the homeowner able to pull their equity from their home even if they decide not to move out? So could they ask for an appraisal just to get the equity out?
Yeah. Yes. So our policy, I can't speak to every CLT, of course, because different CLTs do different things, but we do allow our homeowners to access their equity without reselling. So they could do a cash out refinance, or we have only one lender right now that does home equity lines of credit for our homeowners. And that is one of the challenges with CLTs, is the lending relationships and partnerships. Because there's this whole other restriction on the property, right? And a lot of lenders actually view our lease as a lien on the property, and they've got their first mortgage, so then suddenly that new loan is in third position, and no one likes to be in third position. So, but we do have credit unions basically that will work with us for the home equity lines of credit. Some CLTs will not allow homeowners to take out more than 80% or 10, they still want to make sure they're not over, if you had to sell, basically you take out this loan, you have to sell the next day, you got to make sure to be able to pay everything off. And some CLTs actually want people to even have a little buffer there, so they're not using all of their equity prior to closing, or prior to sale, sorry. And to clarify, when we're talking about lenders, I just want to make it clear, we have great lender partners, and we always provide a list of more than 3 on that list, as far as, so people have choices. And we want to make sure we have lenders on there that reflect the community we serve, that we have lenders now that do I-10 loans, as well as we have a lender that does Sharia compliant lending. So we're always looking at kind of growing that and making sure that our homeowners have options.
I'm just wondering if you could speak to sort of some of the numbers that go into bringing a new house into the CLT. Kind of, is there an amount of, or a percentage of funding that you usually have to put in to allow the mortgage to be enough money to purchase a home? If you could just speak to that.
Yeah, so first what community land trusts do is they look at like an affordable price. So basically we look at the area median income and the community we're serving, and we're trying to target, for us, we're trying to target 60% of the area median income, affordability at that level. So we look at what is affordable to a 60% AMI family, basically. And if based on current interest rates, taxes, insurance, all included. So if, for example, that is $285,000, then that's like, hey, someone comes to us, they say they have a great project, they always do, and they can bring us these homes for $400,000. Great. We just need to find subsidy then to fill that difference, and that's how we kind of then match. So it isn't really about like a percentage discount necessarily that we're looking to fill. It really starts at that number, what affordability is. And it's important, we're going to sell that house to someone under 80% of the area median income. And sometimes, the developer will be like, well, but someone at 80% could afford $325,000. So really you don't need all that subsidy. But our whole purpose is, if we sold that house to someone at 80% AMI first time, then when we go to resell it, they have to resell it to another 80% or below income household. And incomes, as we know, do not increase at the same rate as housing prices. So when you have an appraisal-based formula specifically, you want to make sure that home comes in initially to your program at that lower range and a better affordability, so that it has the ability to gain, it can go up in value over time and still retain affordability.
Thanks.
Hi, thank you for this great presentation, and Heather, really appreciate you sharing your experiences. I was going to ask about, for the folks that you have that are qualified to buy, how long does it usually get to take them placed? And then what are the limiting factors that you've experienced? Is it like availability of land, of land? Is it having enough funding? Is it all of those things? Just curious.
I used to answer that question as like, oh, it's usually 6 months to a year to once you enter the program, get mortgage ready, and then you have to wait. Interestingly enough, we have homes available right now for sale in Northeast Portland, $242,500, and they are ready. And it's been interesting to me that there's such this need. We have people coming in our doors with interest, and yet we still have homes that are basically available on a first come, first served basis. So I think, we could talk about why that is. There's, still post-COVID outreach challenges. There's still, obviously with the current world we live in, there's a whole segment of the community that is not moving towards ownership at this time due to other instabilities. But yeah, it baffles me that we have homes available. What was the second part?
Well, I was actually assuming that you had like a long wait. I mean, do you have a wait list of folks? And if you, as far as expanding your availability, I'm just wondering if are you able to expand at the pace you want to, or do you wish you had more of this is kind of a silly question. Do you wish you had more funding, or do you think the access to land is an issue, or what is kind of constraining you from expanding, scaling up your program?
Currently, I think definitely, funding is an issue. We have more, I think at least once a week, have somebody reaching out with a project idea or possibility, and there's just not going to be enough funding to do all of those. Capacity is also a real issue. How do we scale up enough to be able to respond to those opportunities with also wanting to make sure that we don't scale up too quickly. And really our commitment as a CLT is, our 600 homeowners that we currently have. We want to get other folks and more homes into the program, but we also have, that's our ultimate stewardship at this point. If all else fails, right, we need to be able to provide the supports to those homeowners. Oh yeah. I think we got like, no. Okay, quick last question. Let's do that.
So I live in rural Oregon, and there's a lot of community backlash against our program and what we're trying to do. And I'm curious how you've navigated community education around not owning land, but owning the house, and how you've kind of combated that and worked your way around it.
Oh, wow, yeah. It's a constant battle. I mean, I think that especially, and rightfully so, I think that with the history of discrimination in our country, the fact of not owning land seems very, very frightening. And I don't really, the way our leases read, though, it's just like the lease itself is such a secure and protective lease. That is why lenders will lend on it. It creates, there's a real property interest there. So I think maybe just highlighting, to me, what's more important for folks to really understand is the resale process and what what the trade-off is in resale, not the fact of not owning land, because most families won't even actually really feel any different than a homeowner that owns the land, and they're going to get lower taxes, right? Property taxes. So I think it's probably highlighting the security of this nationally used lease agreement that has been used for years to create both protection for the homeowner themselves and for the CLT is probably the important piece of it.
One quick thing. So I'm from Montana, and there are 5 or 6 CLTs. I'm not exactly sure now. In Montana, and there are a lot of small towns, and it's pretty rural in a lot of places. And one of the arguments that we use, if you're talking about political pressure not from people who want to buy into the program, but from people who are not buying into the program, is you as a CLT have the choice to pay your full rent on the land and be a good neighbor in that way. And I have a client in a tiny town of 5,000 people, and they pay all, they don't ask for a nonprofit exemption to the taxes, because everybody knows not only who's paying their taxes, but when they're paying their taxes. And, if there's a project, an infrastructure project that's going in, and your neighbors think you're not contributing, it can be really very, touchy. So that would be my recommendation. And I would just connect with folks in other rural areas too, because they've all dealt with that. Okay. Oh, 10 minutes?
I think that's it. I think we're wrapping up at 4:45. At least I am. So thank you all for coming, and yeah.